friends, good afternoon, and I have tremendous pleasure in having Mr. Unnikrishnan, a veteran gold loan banker, the former deputy CEO of Manappuram Gold Finance, and now he's on his own started an enterprise called Yogakshemam NBFC. Here again, three quarters of his portfolio are again gold loan business, operates predominantly from the south. Someone known as a veteran in this industry, Mr. Unnikrishnan. It's indeed our pleasure and privilege to have you chatting with us on this conversation. So, welcome, sir.
Thank you. I have how many minutes?
So we've got stuff. We can go 45 minutes to an hour. We can move on.
I will not take that much, but I'll
No, I
try
think
to.
the way it would, let's let it be a Q&A session.
Then
And
that's
then
fine.
we will
Yeah.
also open it up for the audience as well,
Yeah.
where they will also keep starting there.
Yeah.
So now, to begin with, Mr. Unnikrishnan, if you can just take us through with your journey in the lending business since you started your career. I think that would be very interesting for us to know.
Yeah. See, I started my association with Manappuram in mid 90s actually.
Okay.
That is the time when the company was a very small one with roughly 10 crores in loan outstanding, but the entire 10 crores was in asset financing, in vehicle financing. Okay. My memory is correct. We by mid 90s there was a lot of NBFCs failed. Pre-RBI period. A lot of NBFCs like Prudential, lot of your Ramesh Car, lot of companies failed in Tamil Nadu and rest of it.
Yes. I remember Ramesh Cars very well. Yes.
And then around that period, things were becoming very tough for us. Okay. Then Mr. Nantakumar, who is the promoter of Manappuram, he was having some gold lending business started by his father.
Okay.
So till then, no NBFC was doing gold loan in an NBFC vehicle. People were not clear whether an NBFC can do actual gold lending, etc. Not very clear, because at that time the classification was like all the NBFCs were seen as a hire purchase company. There was no classification gold. Other classifications were not there, or if at all it was there, it was not. People were not aware of that. Then finally we had a discussion, and when things were not looking great. I think this happened in 1997. I think.
Okay.
Post RBI Amendment Act in 1997. We thought of starting gold lending in our company.
Okay.
Then what happened? Then we started our first branch in Calicut City, Kozhikode.
Okay.
Okay. Then in that branch, we started. I think in 97 Jan. Sorry, not 97, 98 Jan. Okay. Then within 3 months, that branch had 1 crore in loan outstanding. Then we realized that there is a lot of scope for this business. Then we started opening branches. We opened another branch in Kasaragod. All these branches started growing very fast. Okay. That is how we started our lending business. For your information, so Manappuram Finance is the first NBFC ever to have started a gold loan business in India.
Okay.
I'm talking about the NBFC.
And how big is it now in terms of size?
The consolidated size must be around 25,000 crores. I don't closely follow the numbers, but it's roughly that number. Okay. Out of that, around 75%, 17,000 crore is in gold loan.
Is in gold. And the time you left, what was the size of Manappuram, sir?
No, we had gone up to 12,000 crores in 2012 to be precise. Then for a couple of years, we had to degrow the book, on account of funding challenges, regulatory changes. RBI brought in new loan to value ratio, because till then we were lending 85%. Then suddenly RBI said you should not lend more than 60%. Then that 60% was increased to 75%, like that.
Okay.
So then then that book from 12,000 crore we had to bring it down to 7,500 crore. When I left, it was around 10,000 crores.
And that time you were the deputy CEO of Manappuram.
In the sense, see, this industry was invented by Mr. Nantakumar, with people like me. Okay. So I was.
Your entrepreneurial journey started, sir, in 2011.
No, quit Manappuram in 2015 only. 15.
15. Okay.
Yeah, 15 only.
Okay.
After that only I started this company. Not started, I took over this company from some people known to me.
Okay. And how big is your enterprise at this point, sir?
There are roughly 300 crores.
300 crores. And what is the size of gold loan in your portfolio as of
It's
now?
more. It's around 210 crores.
210 crores. So now, gold as a business, I think there are only two businesses where the collateral is kept with the lender. I think one is fixed deposit based overdraft and gold loan. In every other case, be it mortgage loan or housing loan or car loan or two-wheeler loan, the borrower has the collateral. Only in your loan and FD, the lender has the collateral. So, what is your underwriting magic in gold loans?
See, basically, it's very simple. See, gold has got its own qualities. One is it is highly liquid. Second thing is, whenever there is trouble in the world, this is the only asset, where people start parking money and, the price goes up. Goes up. And in India, over and above this, there is one more, attachment to gold. That is more like, we for us, this is a social insurance asset. Okay. Yes. See, look at India. India, till a few years back, even now, India continues to be basically a rural economy, no?
Yes.
At least significant portion of our activities still happen in the rural areas.
Yes.
So, see, you look at, till a few years back, in the rural economy, agriculture is the main activity. Okay. And agriculture was dependent on monsoon. Okay. So for monsoon, in one particular area, for monsoon fails, how will you do cultivation next time? This was a big question in the rural economy. That is how people invented gold as an asset, which more as an insurance asset. Like instead of buying a policy from an insurance company for a crop policy, what people used to do, whenever they get a bumper crop, okay, they will buy gold. Okay. When they buy gold, there was a lot of religious angle to that. That's a different story. What I'm saying is, gold was a revered asset. It was a respected asset. Yes. Nobody ever thinks of selling gold in India. Okay. That's the last thing, the people in India, any part of the country, that's the last thing we do. So what happens? In a bad year, the gold will be unlocked. Gold will be used for pledging. If there is a uncertainty with the monsoon, if the crop is failing. So this asset used to act as an insurance, where his own investment is working as a capital for the next crop. That is how then later on this got attached to the girl child in the family, like that.
This particular sentiment, what you're saying, acts as a far bigger deterrent for default rather than any other value of the asset. As far as
see, that is very much there. This is a very sought after asset class. And it will continue to be so for the foreseeable future.
What is the extent of loans which you had to liquidate selling of the assets in terms of percentage?
Okay, see the percentage. We need to understand it in a granular details. Okay, yes. Why I'm saying this? For gold, if you look at a typical year, okay. If the amount outstanding in a company, suppose it is say 100 crores, okay. Typically in that year, the disbursement of that loan would have been around 300 to 350 crores.
Yes.
Okay. Correct. So on a disbursement of 350 crores, roughly 2% is what we sell. Okay, but if there is going to be a downward pressure,
get it. It looks 7% on your book.
Outstanding. Exactly. Got it. But when you look at the disbursement, it's around 2%.
Okay. On the disbursement, 2% is enforced collections.
That's true.
Okay. And do you see that percentage given where we are now? The fact that there is a 3-month moratorium getting extended, where you're idly, I'm sure you would have stopped your collections right at this point.
That's true.
So, do you see that percentage going up this year, sir?
No. See, for gold, what will happen? Especially for the last 6 months, gold price has gone up significantly. No. So what will happen is there is a residual interest in the gold for the customer. Yes. Okay. So what we normally do, even if we end up selling, or if the customer is not responding after these 2-3 months of moratorium,
yes,
in their own interest, we'll push them to take it back. Okay. So what normally happens in the south and all part of the country is, if the customer himself is not able to take it back, he'll take the help of some goldsmith or some, small jeweler. Okay. He will come with the jeweler. Jeweler will tender the money, take it back, and that residual amount, that will be given back to the customer by this particular jeweler.
Get it.
Because whenever there is residual interest in the gold, the customer never leaves the asset. But having said that, there could still be 0.5% of the customers who may not be just there when we send the letters or when we call them back for taking back their jewelry, etc. Those cases we anyways end up selling, and we will send the remaining balance to them. After setting off our outstanding balance, we'll send back the money to them,
to whichever account, bank details which you have. So what is the recovery procedure, sir? Like in a Sarfazi, we need to give a notice 1, 2, 3, and then you go ahead with attaching the property. When it comes to gold loan,
see, for this is more like this is covered under India Contract Act, pledge.
Yes.
So this is a pledge of a movable asset. I know only movable assets can be pledged. In pledge, your recourse is very easy. All you have to do is you have to inform the customer, keep proof of that that intimation with you. That means you should be having adequate documents to prove that you have given decent notice period to the customer. Normally we give 15 days notice period. Okay. But still, if the customer comes back and remits some interest, still we give time. In gold loan, there is nothing like he has to redeem his gold in order to avoid a default. So long as he keeps on remitting the interest, we will allow him sufficient time.
Okay.
Then he comes back when he gets the letter. So if he doesn't come back, we advertise in the newspaper.
Okay.
Then we give one more notice to him saying that on this particular date, we'll be conducting the auctions, and you can take part in the auctions, like that. That will be a 7 days notice.
Okay.
Like that, we do. Then some customers come back. Normally, the customers normally come back.
Okay. So in the meanwhile, friends, just keep your questions going as we discuss, and we shall pick up the questions as and when the initial discussion with Mr. Onikrishnan is over. So now coming back, so when it comes to the ticket size, what is your average ticket size of the gold loans, and who is your ideal? What is your client mix?
See, the ticket size, we need to understand in, just like the other information which I shared, like the auction percentage. See, typically a customer makes 2 pledges, meaning 2 loans. That's the average. Each customer will be having, on an average, will be having 2 loans. This has been the case for the last 15-20 years. Even last year, that has not changed. So whenever we look at the customers, each customer will be having 2 loans. Okay. One loan will be like, it used to be around 15,000 rupees when gold price was 10,000 rupees, like that. Now the ticket size is around 35,000 rupees. Okay. Now with this spurt in gold price, I think by the next year end, this may become 40,000 rupees. Okay. So from a customer, currently we are getting 60,000, 70,000 rupees per customer exposure. Okay. And this varies from place to place. Like in rural areas, this could be slightly low. Instead of 35,000, this could be 30,000. In city areas, this could be 50,000 or 60,000, like that. So on an average, when you look at it, it is around 35,000 rupees.
35,000. And what is the typical profile? Are these small businesses or daily workers or small-time salaried employees? What is the average ticket size? Profile of your customers?
It's a mix of all sorts of people. See, look at like this. If somebody is studying, he's a guy from Kerala, a guy or girl. Okay, she's from Kerala. She's studying some nursing in, say, Tamil Nadu, college in Tamil Nadu. Okay. She has to, pay some fees urgently, some hostel fees or something. This is something they're also to do. I'm just giving an example. Another example could be that, one of your friends or one of the family members or some distant relation suddenly is facing some financial crunch. Okay. Or there is a hospital need in their family. See, in Indian rural economy, what happens is, when you want to help somebody, people manage it very well. What they do, instead of giving cash, okay, especially this happens with the ladies. Ladies, what they do, if one of their friends is facing some cash crunch or something, or suppose a brother is, a married woman's brother. Okay. Brother is facing some cash crunch. What she does, she does not check with his, she may check with her husband, but what she does is, though, he's her brother, what
Get
she
it?
does is, she'll say, I have the family jewel, you take it, brother. Okay. And whenever I need, you give it back to me. So that if she hands over cash to him, the probability of it coming back, depends on so many other variables.
Get
But if it is against gold, what happens is, there will be two, three families involved. Brother's wife will be involved, their own mother will be involved, her husband will be involved. Then it becomes some sort of guarantee. I'm just giving a typical family relationship in India. This works in a rural economy also. When your immediate neighbor you need some cash, okay, people, instead of lending in cash, they lend their jewelry. Okay, there are a lot of cases happening like that. Then, of course, another example is, this is the mango season. No, you go to Salem, mango season. What happens, these mangoes are purchased by not, it is not taken to the market by the farmers. No, it is normally done by some middlemen.
Yes.
Okay, so for these 3 months, working capital requirement will be very high. Okay, and these people are not people, maintaining accounts, audit, and all that. Okay, so where do they borrow? They borrow against their jewelry. Okay, and it is high margin business for them. They make the money in 3 months' time. They repay the loan. This happens with the banana cultivation in Kerala, in Salem, sorry, in Trichy.
So for
like
seasonal requirements, gold becomes a good fix for them to instantly.
Exactly.
So, and do you take any guarantors or co-applicants for your loan, or it's just the person who comes with the jewelry that you take them as an application?
In this loan, compared to other type of lending, there is one major difference. Okay. In any type of lending, we are taking a call on the customer, right?
Yes.
We are taking a call on the customer. We look at their credit score. We check their background, whether what is the need, whether using this money, whether he will be able to repay the money. While in gold, this is, as you said, this is just like a loan against an FD. FD is not in rupee terms. FD is in international currency, which is gold. With on that asset, in addition, the customer is having emotional attachment. Okay.
So have there been instances of gold loan companies going bust, sir, in the past?
No.
There has never been an instance.
Unless the person commits a fraud.
Okay.
It cannot happen. Because even in 2012 to 2015, there was a correction in gold price. That happened over a period of, 24 months or something. Even in that period, what happened is, the gold loan outstanding came down. Okay, for the companies. Nobody lost the money.
Nobody lost money in.
There have been cases where we could recover only the principal, but there was no case of losing the principal. See, in this business, how do you lose principal? You can lose principal if you make a wrong judgment on the quality of the jewelry. If some customer is committing a fraud on you, or if your staff members collude with your customers, then they pledge a fake gold. So that in this business, appraisal and continuous inventory verification is very important. So companies like us, typically have once in 60 days or once in 90 days, depending upon the size of your company and risk perception. Each branch will be subject to thorough verification every 60 days or 90 days.
Okay. So yours is more a distribution play and a QC on the asset verification.
It is, it is a distribution play. It is pulling the customer. Like, you have to use customers have to come to your branch. You cannot push somebody to borrow against gold.
So now we see some startups, sir, who, let's look at the case of a company like Rupeek, which goes to the customer's house, picks up the jewelry there, instantly disburses cash to their account. Where do you see such services going, sir? Because that's like how you order from Swiggy, you can order gold loan at your doorstep.
See, Rupeek had a beginning, they had a lot of interactions with me. Okay, I was their advisor when they started. Okay. Advisor sort of, you can, I was not officially designated as advisor, but I was one of the early stage investors also in the company, and a namesake investment I had made. Okay. When this idea was moved to me, I said, this is how the future is going to be. Okay. because where see, in gold loan company it is very difficult to, as I said, very difficult to attract a customer. So what is your value proposition? See, in the past the value proposition was like, I am faster than the other guy. Okay,
Yes.
I am an exclusive player. Okay, uh, you know uh, monoliner. Okay, I can give you more LTV. That is not there now. Earlier,
Yes, no,
we used to,
RBI has fixed that.
exactly, we used to tell the customers, we will give you 5% more than a bank gives.
Get
Those
it.
things are not possible now. So turnaround time, everybody is computerized, everybody's staff are equally trained. So there is no USP for any company. So if you're an emerging company, you need an USP, no?
Yes.
So that USP, how can you improve your service? So in this business, if you look at it, why customers come to NBFCs compared to banks? See,
It's
you look
faster
at this,
service.
banks are lending at 13%, 14%, or
Yes.
maybe 15%.
Yes.
NBFCs are lending anything upward of 20%, 20 to 22%
Yes.
is the general rate. Why still people are coming to NBFC? Because they know that this particular NBFC is doing only gold loan, number one, and I can get the money in, say, 30 minutes or 15 minutes time, depending
Get
upon
it.
the number of ornaments. Okay, and I have some kind of privacy in an NBFC, because there, all the customers are like me, so that nobody will, uh, the social stigma and all that. No,
Yes.
that
Yes.
when
Yes.
you go to
Yes.
bank and all, that is
Yes.
when they go to an NBFC, they don't feel so.
Get it.
So my feeling was like, if you can deliver the service at home, this is going to be a value differentiator for
Okay.
the service provider. Because
Yes.
what you're saying, see, if it is on a working day, you need some money.
Hmm.
The customer still have to waste half a day's job. No, he has
Hmm.
to skip the job.
Correct. Correct. Correct.
So there is an opportunity cost for the customer. So if you can do the business at his doorstep in 30 minutes time, after business hours,
Hmm.
that's a value proposition.
Yes. So
Now,
that.
having said that, the challenge here is, see, the models, they're proposing. See, one thing is, a number of customers even today, I have seen in this particular model, they want to see the branch. They want to see the branch. They want to see, because they're all worried about, when it comes to
Where is
redemption,
my
take,
asset going to
where
be?
is my gold? Where are you storing it? Do you have a sufficient storage space?
Hmm.
How will I meet you?
Get
When
it.
I need my gold, and today you are coming to my place, but when I need you, where should I go? All these
Hmm.
questions will arise in the mind of the customer. No, so I have seen a number of customers in cities. They want to see the branch.
Hmm.
Okay,
Hmm. Hmm.
so instead of a pure play fintech, my guess is, if you can side by side, if you can establish your brand as well with a fintech play, that will be a
Okay.
even more better
That
idea.
would be a
Okay,
much more larger value
ah,
proposition.
exactly.
And this
Um,
additional
and
10 or 15% over and above the RBI LTV, how do you look at it, sir? Is that going to have
See,
an
there are two sides to this. One is regulatory, the other
issue?
is business. Okay, when you look at the regulatory side, I think, see, the challenge is, if RBI gets to know about this, okay, definitely they will say, no, you should not do this, because this is circumventing my rule. RBI
Hmm.
is very, very possessive. When somebody is trying to circumvent their rule, they are very possessive. Okay,
Okay.
especially this is not a enabler rule. This is a
Correct.
restrictive rule. Okay,
Yes.
so
Yes.
whenever somebody tries to put some interpretation into a restrictive rule, they will definitely pull them up. I'm
Correct.
100% sure about that. But when X and Y, X has given 75% loan, on that Y is taking a call, probably RBI may not do anything. Okay, I'm not sure about it. Okay, probably RBI may not do it. And so long as you're a fintech company, or so long as you're a small company, till you're a systemic important company, they may give you some leeway, because that is
Okay.
how RBI functions normally. Okay, but once you're a bigger company, you suppose you cost 500 crores in asset size and all that, no, then my guess is RBI will not allow that to happen. But as I said, if X has lent 70% and Y has lent another 5%, and if that Y is no way connected with X, then that's a different thing. Okay,
Get it. Get it. Get it. Get
if
it.
they if they are not, see, but if two people are independently managing, two sets of people independently managing, I
Yes.
don't think there is
Yes.
going to be a problem. If the same
Get it.
set of people are managing this, then
Get it.
there is a big issue. Because you look at, I can give you a big, example. A fintech normally will be a DSA of a bank. Okay,
Yes.
and they
Or
they will be the
banking
people who will,
correspondent, right?
more like a banking correspondent. Okay, so, or DSA. Okay, when they do major part of the job, and it, the bank after lending, 75%, if the DSA himself is lending another 10%, my guess is, for 1 year or 2 years, RBI may not raise an issue. If this is going to be a bigger balance sheet, I'm sure, RBI will raise concerns about it.
Okay. So now we're starting to get questions from
But
the
having
audience.
said that, if two people are independently taking a call on this margin, then we
Yes.
can.
Yes.
Yeah.
Yes.
So
Yes.
we need to structure this beautifully. Now let me come to the business side of this. See, what happens is, for the last 2 years, I think this started in 2019 June or something. The gold price started going up. Okay, thanks to various reasons, because that's the time world started slowing down in terms of country's GDP, business activity, growth, etc. Okay, so now gold price has been going up. When you take this extra call, what happens is, you don't have any control on the bank. Okay, the bank will anyway take back their money. So if there is going to be a correction, you're going to be the sufferer.
Correct. Correct. I think that's a call where it effectively becomes an unsecured portfolio on a gold loan.
Yeah. So we have to be very careful. Like, this has to be structured like, this has to be structured like a 3-month loan or 4-month loan, something like that, instead of a 1-year loan, so that, and also the waterfall mechanism should be very clear. Okay. Like,
Yes.
You first pay my loan, then thereafter only you can, redeem the other gold, etc.
Yes.
But
Yes.
here the challenge is, I'll tell you the challenge. Suppose there is a correction or okay, suppose something like that. I'm just giving Rupik's example. If Rupik customer, that particular customer of Rupik is going directly to the bank, okay,
yes, sir.
the bank will be under obligation to return the gold, to him.
Yes. Yes. Yes.
That's my challenge. Then how you structure that, then even if you structure it in document, how far you can enforce it it's a trust business.
Yes.
See, one thing, any fintech will not be lending blindly to the customer. They would have taken a call based on his credit score, etc. So for genuine customers,
when it comes to gold loans, I don't foresee. I don't know. Generally, for the interaction is gold companies don't even take CIBIL reports, right? It's not required.
No, that is not fully correct. As I said, when somebody takes a call like this, extra 10% or that, they really look at credit score. Okay,
yes,
that is
additional 10%. Yes, yes.
Definitely they'll be looking at it. Another thing, we also do credit checking for exposures beyond a point, because one needs to understand this business in a slightly different detail. Because see, look at, this is not lending against bullion. This is lending. This business is all about lending against household used jewelry. This is the definition we have given. So essentially, this gold should be coming from a family. That is a household thing. Then it should be a used jewelry of that family.
Yes.
Okay. Then the gold should be in the form of jewelry. All these 3 parameters should be met.
Get it.
So then only this. Then the conclusion is, a family in India typically must be having only so much of gold. Somebody has done some survey which said, in India the average family holding is around 16 grams of gold, something.
Yes.
Remember that, somebody has some, sample study. Okay, it varies from place to place, but on average 16 grams is the
get it.
So per now, family. That includes.
We're now getting a lot of questions, sir. What I thought is, before I just open up, one key thing is, how do you see this COVID lockdown affecting gold loan companies, sir? Like yours, do you
see gold loan companies? This is not an event at all for them. I'll tell you. Let me be very frank with you. This, if you're a pure play gold loan company, and the price has been going up, even if this lasts for 3 more months, okay, they will be better off. I'll tell you the reason. There are 2 reasons for this. During COVID period, there is zero administration. There is no work. There is no interest collection. There is no repledging. Nothing. Okay, so the work is less. Okay, there is less use of stationery, less use of energy, everything. Second thing is, there is sufficient margin even after since the price has gone up. There is sufficient margin. Another thing, when you reopen the branches, what will happen is, there will be a margin in the same gold which is already pledged. People may, though the customers who are desperate, they may take a higher amount of loan.
They'll come in for a top up, is what you're saying. Okay.
Definitely, because you look at, see, when the economy reopens after the COVID, who will lend to our customers? Because all the past credit history data may not be of much use
True.
unless you go and see, how this customer is going to come up in life. I'm talking about the self-employed set of people or
So,
people who are
just to
employed.
pause here, sir. Now, we saw what happened to the microfinance industry, where at one point, the people at the lowest ebb of the society, they went against them. Then the governments took a different stand. What happened in Andhra was a classic example. So, if imagine the fact that your average ticket size is 35,000, we are talking about people at the lowest ebb of the society. Do you think a social issue in a moment like this could ever come in to affect the recoverability of loan? Because if imagine
Gold,
they are not able to repay, there has to
gold
be
loan, gold loan.
gold loan. Yes.
No, see, that doesn't happen. See, I'll tell you the reason. As I said, in gold loan, one need not to take back his jewelry. Suppose a person has borrowed 1 lakh rupees from us. Okay.
Mm.
If he delays, what is the interest he has to pay? He has to pay 2,000 rupees to me per month. So,
Yes.
so long as he has got 4 months, 4,000 rupees, I will give him two more months.
Okay.
I'm not losing. No, I'm still without doing anything. I'm getting my interest.
So
Why
at
should
till
I disturb him?
75% of LTV, you will do that, or you
Ah,
will.
okay. Or see in this current scenario, actually what will happen? Okay, I have lent him 2,500 rupees per gram. Okay,
Yes.
he owes me 3 months interest. Okay,
Yes.
he has borrowed 1 lakh rupees. I'm
Yes.
charging 24% interest. Okay,
Yes.
so after 3 months, he has to give me 6,000 rupees, right?
Yes. Yes. Yes.
As interest
Yes.
on 1 lakh rupees.
Yes, sir. I agree.
So what happens after 6 months? He comes and he tells me, no, I don't have money. Then I'll tell him, you don't have to do anything. You just fill up these forms. I'll renew the pledge for 1 lakh 6,000 rupees.
Okay. 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 Okay.
Hello,
So,
Divakar.
yes, I'm able to hear you. We're able to
No,
hear
your
you,
voice is not audible.
sir. No, I'm able
Hello,
to hear you. Yeah. Are you able to hear me, sir?
hello,
Hello. I can hear
hello,
you. I think.
hello. Now,
Yes.
sorry. It's a mistake on my side.
Good.
Okay.
Okay. Okay. Okay.
Yeah,
So
yeah.
now we'll just quickly move on to the questions. So
Uh,
the
was,
question
was,
is,
was I was I audible to you?
yes, yes, absolutely, sir.
So he
Absolutely.
can renew the loan. So he
He
doesn't have
got
to
it.
pay anything.
He
So there is
he
no
not
question of
pay.
default.
Yes.
There is no
Yes.
question of default.
There's no question. Get it. So now one of the questions from Mr. Guru Prasad is, how do institutions establish the ownership of the underlying asset provided by the borrower? Do you insist on bills, or how do you know that the person who's coming and pledging is the actual owner of the gold?
See, RBI has put in place some guidelines on this. So what RBI
Okay.
says, when you take a loan, you have to establish the ownership. You can lend only to the owner. Okay.
Okay.
Now what we do is, we have a board approved policy. Okay, which says in case of used jewelry, it will be very difficult to get the invoice. Okay, there will be a lot of family
Yes.
jewels. Nobody
Yes.
knows when you bought it, etc. Therefore, you should get a sworn statement, sort of, an affirmation from the customer that this is
Yes.
owned by him. Okay, that is one. Second thing is, as I said, there are certain features for every loan. For gold loan, we have kept certain flags within the system, which says, if somebody is borrowing 3-4 times in a year, that is fine. But if
Okay.
somebody is borrowing 50 times in a year, it is unlikely he is coming from a household. That means,
Get it.
he
Okay.
must be a trader. Like,
So you have your regular fraud detection systems in place for that.
yes, that works against the customer. That is how we, filter out the unwanted elements from the
Got it.
system.
Got it. Got
Another
it.
thing, high value loans, we have got a verification system. For high value loans, we may not jump into the loan very fast. We will,
Okay.
go back and see, what sort of customer this is. We'll take his credit
Mhm.
score, look at the
Okay.
credit score, what is his background. Then we
Okay.
normally ask him to adduce some evidence as to what sort of business he is doing. If we are suspicious of the background.
Okay.
Sometimes we even do their background checking. I mean, we go to the shop and all that.
Okay. Okay. Nice.
So, see, normally we do not come across any ownership related issues, but
Okay.
in bigger cities, sometimes, for last 3-4 years, I have not faced this. But in Manappuram and all that, we sometimes, used to face some snatching event, that snatched gold getting pledged with
Get
us,
it. Get it.
like that. So that also we got some controls, like, snatched gold will not be in proper shape.
Okay. So that will let you. Okay.
Yeah. So we got some triggers within the system for that.
Okay. Okay. So now coming back, so is your rate of interest variable or it's a flat rate what you charge for every customer, the same rate? Or is there a parameter for differential pricing?
See, this is inversely related to the amount you borrow.
Okay.
The higher amount you want, the higher will be the interest. The lower amount you want, the lower will be the interest. Okay, so it's
LTV you are saying or absolute value?
The LTV, if somebody wants 75%, that will be having highest rate of interest.
Okay.
Somebody wants only 50% of gold value, that interest may be, like Manappuram and Muthoot, they are charging only 12% interest for that. But generally, the lending rate is anything upward of 20% because normally people borrow at a 75%.
Okay. 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 And in terms of QC, sir, this business is so highly human dependent and there's a lot of subjective call in assessing the value of the collateral. Now, is there a mechanism of automating or standardizing this?
See, one is, you let us come back to the appraisal part. Okay. See, there are machines available. The challenge with the machines is it will give you an idea about only the surface quality of the jewelry. Okay. If somebody is so shrewd, what normally, the kind of frauds which happen in gold loan is, there are piped ornaments, ornaments which are in the shape of a pipe, hollow. Okay. Like bangles. So what they do, they put a copper wire inside the pipe. Okay. Come to us. So number one. Number two, a thickly coated ornament, more than 0.55 mm. Okay, you cannot catch that kind of ornaments with a machine. There is a spectrometer or something like that. There is a machine available. It costs you around anything around 5 lakh rupees.
Okay.
So gold loan has to be a combination of appraisal and your credit monitoring. Then only you will succeed.
Every branch you have an appraiser, a valuer.
Then another thing is, if somebody is able to come out with something like a machine based on the Archimedes principle, the old Archimedes principle which we all studied in our primary classes. It's technically possible because it's the water displaced by that jewelry like that. But in India, what happens is again the challenge is 7 out of 10 ornaments will be having stones studded on that. Okay. Stones fixed. So all these throw up fresh challenges for you. So the typical thing, I can tell the probability of human error in this business is very, very low.
Okay.
Unless you. So what I said is,
So you still feel that it's going to be manually driven as far as at least
it
a
has
mix
to
of
be.
both manual and automated.
It has to be. It has to be.
Okay. But again, coming back to the fintechs example in what we were discussing, they have this case of going to the location and disbursing loans using some machines or apparatus. Now, is that something which you feel is significantly fraud prone or not foolproof?
No, nothing.
Okay. So coming back, another question is countries now which are severely affected are likely to use their gold reserves to tide over this crisis. I mean, there's only a hypothetical question. When such a situation happens, you think would there be an impact on global gold prices and how it is likely to affect your business?
I have no clue about that. See, that has not happened in the past. See, look at like this, America is having the highest amount of gold reserves, right?
Okay.
America, for them, it is better to print notes and export it because they can export inflation by exporting the currency. That is what they've been doing for the last 50 years. Okay,
True.
they just export inflation.
True.
Okay, so for a country like America, they will still prefer to print dollar. Okay.
Yes.
My worry is see, there is one more side to this. The dollar demand itself. I mean, I'm not an economist while saying that, but if you look at the mega picture, when the trade volume comes down, which is the currency going to be affected? Dollar, because for anything and everything you need dollar. See, America has created such a system where they've become invincible because of the large reserves of dollar available in the world. It has become the single currency across the world.
Yes, sir.
So what happens, but this is floating on oil. That one should not forget. Dollar is still floating on oil.
Yes.
The oil dries up, or there is going to be an alternative for oil, then the importance of dollar would come down.
The
So
petrodollars will start coming up.
that
Yes.
will make dollar prone to inflation. That may cause
Yes.
inflation for the country. But having said that, whether any country is going to use gold to overcome their balance of payment problem, I mean, I need to think through.
As of now, you don't have. Okay. So now one thing with that moratorium parts are coming back where when we've been interacting with other industry leaders as well. Are you getting a similar moratorium from your institutional lenders, or are banks taking a stand that this moratorium is not applicable to NBFCs?
See, I have on the one side, I have SBI, I have small finance banks, I have some private banks. What has happened is, with SBI, my cash, I have a cash credit limit. On
Okay.
cash credit limit, whether they give me moratorium or not, I'm agnostic. I'm not worried too much about that, because anyway, interest I have to pay the interest after 2 months.
Okay. Okay. You're only
Okay.
adding on to your limit. Yes.
So regarding small finance banks, some of them are coming back and telling me that, in view of some IBA clarification, we cannot give you. But one good thing has
Okay.
happened. You must have come to know about this. Yesterday,
Hmm.
India Bulls filed a case against SIDBI. Okay.
Okay. For not giving this
So
moratorium.
so Delhi High Court has instructed SIDBI to get clarification from RBI before demanding money from India Bulls. So anyway,
Okay.
RBI will issue clarification within the next 2 or 3 days, which is going to
Okay.
happen.
Okay. Okay.
So
Okay.
then we'll have more clarity. Similar thing happened, in 2008 also. People will have, dilly-dallying, regulatory measures.
Yes. Yes. So now one other question is, where do you?
From some banks, I'm not getting from some other banks.
Okay,
It's a
because
mix.
from what we are given to understand, SBI is anyway giving to everyone. I think certain other institutions are still in a fix. The private lenders are still in a fix. I think those who make the most noise get their way out, and those otherwise are still not given this concession. I think that's just that's at least so far what we are getting.
Gold
So
loan
now
companies
you have
problems.
your own vaults for the work with other institutions for vaulting your jewelry.
I have my own vault.
Okay, so every branch you have your own vault.
Yeah. That is mandatory. Wherever you do this business in a branch format, you need a vault facility.
That's mandatory for gold loan business, right?
Yeah. That is mandatory.
Okay. Fine. So I think we've comprehensively had a great idea over this gold
Yeah.
loan business.
And
Your
and
concluding
whenever
thoughts?
you whenever you buy the storage,
Huh?
you go for the best quality.
Okay.
Okay.
Okay. Okay.
There are 2-3 types of qualities available.
Okay.
Like torch resistant.
Okay.
Like that. So you go for the best quality.
Okay. And you are completely covered on all angles as far as insurance is
No,
concerned,
I
right?
see. Regarding this, I want to tell you a few more things, like the security part. Okay,
Hmm.
you need a very sophisticated 24-hour security, which you can monitor from your head office or your corporate office.
Okay. Okay. Okay.
That is mandatory. Not mandatory. That is a prerequisite.
Okay. Okay.
It's not a regulatory. What I'm saying, it's a prerequisite. From a customer angle, because the biggest risk I have seen in this business is, if you are not able to return the jewelry to the customer, then you lose your reputation.
The credibility is lost. Get it?
Yeah.
Okay. So now, so the sum and substance of this whole story is gold loan business is here to withstand this crisis, and there's nothing alarming as far as the gold loan business is concerned as we speak now.
Absolutely nothing. And on the contrary, this will
Yes.
probe opportunities when we reopen our branches. See,
That's
whatever, even this moratorium, I don't think any gold loan company will be interested in a moratorium. But the problem is, since our branches are shut, we are not able to generate cash.
get it.
That's the reason we are talking about moratorium. Otherwise, we won't be even talking about moratorium.
Okay. I think fantastic, sir. I think it's one of the very few positive conversations we've had in these times.
Okay.
Where yes,
Okay.
business is still doing well and nothing to worry. Thanks to gold.
See,
Gold
having said that, even in other types of lending, secure lending, I'm talking about, the vehicle business, that sort of business. See, one thing, one need not be until worried about a 2 months moratorium, because people are worried, after 3 months, there will be 3 months due. What I'm saying is, then that becomes the new normal across the country, across the world.
That's
Why
true.
should we be unduly
Absolutely.
worried?
No, see,
That's a new normal.
I agree, sir. But the challenge is, new normal is fine, but someone has to take the write-off. Right? That's where the problem
That
comes.
is there. That is there. There will be credit loss. You should be having
The
capital
entire
buffer.
fear is not about not paying, but who's going to bear the ultimate burden of write-off.
That you're making a point, right? Rightly said. See, you should be having P&L buffer and balance sheet buffer for that.
Yes.
If your P&L buffer is sufficient, then that's fine. 1 year you lose. Next year you can make money. But if it hits your balance sheet, if it hits your balance sheet, if it hits your balance sheet, there is an
50% discount only because of the unsecured portfolio, sir.
That's true.
So, Mr. Unnikrishnan, thanks a lot, sir, for a wonderful conversation regarding your industry, and we really got to learn a lot about your business. Thank you once again, and looking forward to having you again on the platform very soon, sir. Thank you.
Thank you, Divagar. Thank you. Nice talking to you. Okay, bye.